Great. So I'm really excited about today. This is some really clear, actionable stuff that I think will be helpful in trying to figure out how to bring alternate funds into your organization. So we have Beth Heiser, who is the Chief Program Officer with NeighborWorks Home Partners in Minneapolis, Minnesota. She's worked for more than 15 years in a number of nonprofit community development and fundraising roles, including 7 years as Executive Director of a neighborhood CDC. And Erin Moran is the Director of Advancement with NeighborWorks Home Partners in Minneapolis, Minnesota. And I will say that when I looked up her name, of course, the first person that came up was the actress Erin Moran, and I had forgotten all about that. It just made me think of Chachi. Anyway, she supports the mission of expanding homeownership opportunities by engaging donors, building meaningful relationships, and developing sustainable fundraising initiatives. So, Beth and Erin, I hand it to you.
Thank you, Ellie. We're really pleased to be with our peers in a really tough time. So, talking money seems like a fantastic. So, what do we do next? So, again, I'm Beth Heiser, the Chief Program Officer here at NeighborWorks Home Partners. I've been here almost 10 years. And we have had a variety of ways to attack funding the mission. The next slide would be great. Thank you. A little bit about our organization. Our mission is really empowering individuals and communities, helping people buy, fix, and keep their homes. Some of you may or may not know Minnesota actually has one of the highest homeownership disparity gaps in the country, with 76% of white families owning homes and about 41% communities of color owning homes. That's just about 23% for Black families in particular. Helping eliminate that homeownership disparity gap is certainly at the top of our list. Uh, like many of you, we're empowering customers with knowledge to buy, fix, and keep their homes. We have done some real estate development as well to enhance neighborhoods and better the lives of our home buyers. And we have a number of home improvement products to help folks continue to retain that equity and improve their home, and then create access to home ownership with down payment assistance. Next slide, please. Our programs really fall into two buckets. We have a home ownership center, which we have an 8-hour HUD curriculum workshop that a number of lenders and our own down payment assistance programs require in order to access some of those funds. We do financial education, both short and long-term coaching, as well as refinance counseling, post-purchase advising and education. This is a new area for us this year. And then foreclosure intervention. We also do down payment assistance, home improvement loans, and some niche first mortgage products. Next slide. So really the heart of the matter today is, why did we go for a director of advancement? This is a new role for us. Our company is over 40 years old, and we've had a variety of different marketing and fundraising like many nonprofits. Right now, I think we're at 18 or 19 as a total headcount in our staff. Our housing counseling department is only 3 people, so we're fairly small. We're NeighborWorks group. We've had a part-time marketing person who would do like the website and Google optimization, social media, and some engagement. Um, when the, since I've come, and when that person left 5, 6 years ago, we outsourced that to a part-time contractor, and our chief financial officer took over supervising that role. There was no real marketing plan or focus. It was just kind of some basic maintenance. Fundraising has been primarily done by our CEO with some technical grant writing assistance from folks like myself. I've been an ED before as well. The limitations of this approach was that marketing and fundraising are super siloed. It was kind of twain the two shall meet. They weren't supervised by the same person, nor very coordinated. Relationships with funders and investors were really tied only to our CEO. And as our business grew, our CEO had less and less time to do donor stewardship, which then actually limits your growth. So it became um, kind of untenable, the amount of grant writing and relationship building that our CEO needed to do to kind of um, gear up as we continued to grow over the last 10 years that I've been here. We did have our CEO, CFO leave in March of this year, who was overseeing the marketing. And we really took the time to rethink, what does fundraising and marketing look like at this point in time? We also got a local grant to support looking at a capital campaign, and it became really abundantly clear through that kind of even is this feasible process that donor stewardship and donor prospecting, we just didn't have bandwidth for any of that in our current staffing configuration. Um, so that led to really taking a hard look at how we can combine and connect both marketing and fundraising. Our hiring process took about 60 to 75 days. We had a good candidate pool. Part of that was due to we made this a director level role instead of kind of a standalone kind of lesser role. And we really wanted a high quality experienced candidate, which we absolutely got with Aaron. Um, in hiring Aaron, we within weeks had an annual marketing plan, an annual fundraising plan. The two are interconnected, and really our focus now is on a stewardship model. It is not just grant writing, which has really been our bread and butter to this date and still is a core of what we do, but and as a piece of what Aaron does, but we've really connected all of that into more of a stewardship model. Our CEO is now able to focus on larger policy issues and kind of navigating our current ever changing environment, which is taking a lot of bandwidth. My role is working closely with the advancement role to really help prospect new contracts and sponsorships. And the advancement role is really focused on building relationships, including major media, creating the sponsorship program, which Aaron will jump into here in a minute, and individual giving, as you're all probably doing right now in Minnesota. We have a Give to the Max Day, there's Giving Tuesday, those kind of things. Um, so that's kind of the nutshell of why. And I would say, in general, this has been one of the best investments we've made. If you don't think these folks will make their money back for you, you are sadly mistaken. You need to make this a high level, important role, invest in it. We have already got sponsorships lined up because of some early stewardship conversations. We were able to attract some additional matching funds through a federal home loan bank matching program with some existing contacts we had, who also had to chip in because it was a matching grant. And some of those early results are kind of flukes, but we really feel like that is the benefit of having this role in general. So I can, the next slide actually goes over the role quickly, and then I'll hand it to Aaron. Um, so it is planning and budgeting on the resource side, that relationship building. So this in day to day looks like we're checking in with all of our investors, whether it's a state finance agency, a local bank, local realtors. We're now courting insurance companies, tracking and stewardship. So we're also making sure we're getting dollars in the door that we're supposed to be coming. Then on the marketing side, again, having that cohesive annual marketing plan, product and service marketing, and then our brand development, which would include our website, social media, and that kind of thing. And for us, really building out our email newsletter, we've already added over 5,000 people to our newsletter just by having someone really focus on how to turn some of our contacts into newsletter recipients. So I will hand it over to Erin now, and she can kind of take you through some of the specifics of her role in the sponsorship in particular.
Thank you, Beth. All right. So, in my role, I came into housing for the very first time with NeighborWorks Home Partners. I've been a fundraiser for many years, I've worked in other fields, and there's one thing that you can carry. There are many things you can carry with fundraising, but what's most important is to bring relationships to the forefront. I think I'm sure some of you here have been in a position where you've been written a grant or been involved in fundraising in some way. And writing a grant is fairly easy, but winning that grant is the hard part, right? That's where it really comes down to relationships. Nobody wants to waste their time writing grants or asking for funding that you're not going to get. And the easiest way to start raising money quickly is to start with the people who are already on your team. And that's just the core of what I do here. I find the people who are already huge champions of NeighborWorks Home Partners, huge champions of housing, and I ask them to get involved financially. You'd be surprised at how many people want to. So, starting from the middle and working out, your board should be the core of your donation program, individual donors. Um, In fundraising, it is often expected that boards are 100% donating to the organization. Even if the smallest donation is $5, that's still really valuable, and that shows that the entire board is on board with your mission. Working out from there, volunteers are people who've already given a lot to your organization via their time, and many of them may find competing interests in their life where they're not still able to volunteer, but they want to continue to be associated with your organization. Or they may continue to volunteer and also join as a donor. That's really valuable. These people can also introduce you to members of their community who may become supporters in the future. And finally, professionals in your industry. This has been one of the most successful things that we've been able to do at NeighborWorks Home Partners is bring in um, folks in banking who work with um, mortgage origination, working with insurance agents, realtors. These folks all have a really vested interest in our shared customers becoming successful homeowners, and they're willing to put their money behind it, not just to kind of create a stronger customer base but for themselves, but to also associate their name with someone doing really good work in housing. That creates a lot of trust for their brand. So it's really win-win when we get to professionals in the industry. And when I'm speaking with these people, I am often asking them to support our housing counseling program directly. Making programmatic gifts is one of the best ways to get donors in the door at an organization. And housing counseling is frankly an easy sell. It has a huge ROI. We're able to spend a relatively small amount of money and create a lot of impact. And especially when we're talking about, these folks I just spoke about, professionals in the industry, we end up having a lot of shared customers between housing counseling, realtors, mortgage loan officers. And sometimes they even want to make a donation in honor of a customer that we shared. And that can be something that is maybe given as part of a gift to their customer at closing, which is just a really beautiful way to pay it forward. It is also very, very mission aligned to line up housing counseling with other members of the for profit housing housing community because at the end of the day, we're all kind of working towards the same goal of helping people achieve home ownership. And we are all coming at it in a different way, but we're working at that together. So, for that reason, I find housing counseling to be one of the best ways for us to raise program dollars. All right, you can go to the next slide. All right. So now we've got some people who've started to donate to the organization, right? Might be $10,000, it might be $50. The most useful thing you can do with your time now is retain those donors. It is so much easier to keep donors than to get new ones. Once someone comes to your organization and is giving you money, you want to keep them coming back year after year after year. And that's all about stewardship. Everyone who donates to your organizations should get an automatic thank you email with a tax receipt. That's just basically a formality at this point. Most people are going to, especially if they're a corporate donor, they are going to get some kind of tax break for their donation. But then you need to bring in your personal touch. Depending on the level of donor and how many donors you have, a phone call or a personal letter are the next best way to make a personal touch to your donors. Just reach out to them. Most people aren't going to answer the phone, right? So it'll just take 45 seconds out of your day to leave a nice voicemail, and that really creates an impression for donors. I like to follow up about 6 months later or so with an impact report. That could be as simple as sending your organization's annual report with a note just to say, you were a part of this, you helped make this happen. Or you can actually translate their dollars um, into actual outcomes. So that's another way to do it. You can actually say $5,000 was able to create this many new homeowners this year. I think the best way that we can provide value as fundraisers is to elevate our partners and connect with our partners. So I create a sponsorship package that helps bring their brand to the forefront so they can be featured on our website and our emails. Or, like today at the beginning of this webinar, we saw many of the financial sponsors, their logos were on the PowerPoint that we saw. So that creates some recognition for that brand, and it also creates a little bit of a connection of trust because you're all here because you trust the organization hosting the webinar. Now, associating their names with this organization means you know that they've done some vetting, they know who they're working with, they feel like they are an organization that they want to partner with. I also like to reach out during the year when synergies appear. So this is a little bit more, you can't plan out this kind of work and do it as routinely as I would like. You do really have to have kind of a mental database of your top donors in your head. But if you wrote a blog post that you think would be really interesting to one of your donors, or if you have an event in their neighborhood, perfect opportunity to send a personal note to share that information with them. And that really goes a super long way in building those relationships. And this sounds pretty transactional, but I have to say, I have some amazing relationships that I've made with donors over the year, and they can become really important thought partners and really important supporters of your organization. All right, next slide, please. All right, let's talk about an example sponsorship package. This is the one that I use with NeighborWorks Home Partners. It is on our website. You can always check it out and see if something like this would make sense for your organization. We start with kind of a top level of $10,000, and I arrived at that number by looking at our historical donations, and that's kind of a top slash reach donation for this organization for the past 5 years. I didn't want to set something that was so lofty that we would never reach a foundational sponsor, but I also didn't want to have it be so available that we had too many foundational sponsors. Because as you can see, some of the deliverables of this sponsorship are limited. So we only do a limited amount of home stretch workshops a year. We can't have an unlimited amount of sponsorships for this. So it really is an exclusive item. And I have to say, banks love to be the sponsor of the Homebuyer Education Workshop. They love having their logo and presented by on the slideshow. And it's really just as much as that. They often will offer a volunteer speaker from their organization, but the speaker is not making an advertisement for their bank. They're just being a subject matter expert. So it's a pretty simple but impactful way to not have a ton of work on your end, but provide a lot of value to your sponsors. And then as we cascade down to the other sponsorship levels, there's just limiting the amount of um features on our newsletter or at Homebuyer Education. And you can go on to the next slide. And then just getting down to um, $750. That is a pretty approachable donation for, say, a realtor. I've had a couple of realtors say to me, like, oh, I make more than that on a closing. Well, that is a really good way to transition that money into something that is incredibly affordable, basically marketing and brand support for their business. And I think it's super important to always say we can customize for you. So you can make an in-kind donation. Um, if you want to say there's something that kind of falls in between 750 and 2,500, we can put something together that works for you. So I always try to be open, and when I present this to potential sponsors, I really focus on the fact that we can customize what's here. We can even customize the established packages. If someone wants to sponsor at the $5,000 level, but they have no interest in home stretch, they have interest in our post-purchase services, well, then we can make something work for them. All right, next slide, please. All right. So the truth is, today I'm not talking to a bunch of fundraising managers or directors of development. We are all coming from a lot of different backgrounds, and many people here are housing counselors or may work in other roles in housing organizations. That doesn't mean that all of this is just useless information for you. There are things you can do right now to support your organization. Um, that maybe you can bring back to your coworkers or someone who is in a role that you think would be well suited to doing a little bit of fundraising. There are things you can do now that don't take up a ton of time. You can put together a sponsorship package like the one that I have. You must be able to execute it. If you cannot fulfill what you're offering to sponsors, don't put it on the list. If it's going to create too much work for your organization, don't put it on the list. Sometimes it's just enough to say, we will put your logo on our website, or we will put your logo on our printed materials. That's probably one of the most important parts of a sponsorship package, and it can be enough. If you promise a lot and you can't provide it, you're probably not going to have sponsors come back the next year. I also recommend adding an ask to existing conversations. So if you are doing, if you have a subject matter expert coming in to speak during a homebuyer education workshop, when you're going through planning with them, you can always bring up the costs associated, or you can say, hey, this class is offered for free to our customers. Did you know that? We're able to offer this for free because we have sponsorships. some people don't even know that organizations like ours do have to meet some of our financial needs through donations. So sometimes it's just as simple as bringing it up. You can bring it up and point to the page on your website where we have sponsorship packages. And then you never know. It doesn't have to be a super hard ask. It's nice just to pepper that into conversations. Adding a poster or a sign when you're doing tabling that has a QR code and points to a fundraising page is also a really simple, low effort way to be able to point out that you are an organization that requires donations to thrive. Now, one thing I always want to point out, we cannot cross-pollinate counseling and fundraising. So make sure that none of these asks, none of this comes up during advising sessions or group workshops. Yes, our customers can one day become wonderful supporters and donors of our organization, but it needs to be when they are our past customers. All right, next page. All right, we're on to questions. Here's our contacts, but we have time to answer questions now, so we would absolutely love to do so.
There are no questions in the Q&A box.
Oh my goodness. I can't believe that. I can't believe I've covered everything.
Well, if people want to put questions into the Q&A box, now is the time. Their contact information is in the chat, and you can see Marianne Quaylar said that's when you know you are good. Oh, here we go. Here comes the question. Can we get an example of one of your packages?
Yes, an example, one of our sponsorship packages. Um, Actually, if you want to run back the slides, to slide 8.
Is this
Right.
the one that's on
Yep.
the screen?
Yep.
And I did
Perfect.
put the link to the page where all of that is in there in the chat. I'll do it again here just to be sure. And there's more than just this on that page.
Mhm. Yep.
It's a very, very useful page.
Yeah, so I would say if we run through kind of that, maybe the one slide back, the foundational sponsor, what does this look like in practice? Okay, so we offer the official sponsorship of 2 homebuyer education workshops. So that is in and of itself a little package. We add their logo to the presentation. We add their logo to the events that we put on Facebook, and we create an image advertising the homebuyer education workshops that has both of our logos on it that we share with their team so they can also say, hey, we'll be speaking at and sponsoring homebuyer education. We're really happy to be, supporting home ownership. And that also helps us drive signups to our classes, which is really great. A partner blog for our website is something that was kind of a sleeper. I was really surprised. People are really interested in doing that. Folks love sharing their expertise. We've had mortgage loan officers write blogs about misconceptions. Um, the misconception about needing 20% down, for example. We've had people just write blogs about why they choose to give, why philanthropy is important to their business. And that's just been really fun to do and also is a great opportunity to get to know your funders better. We then put the logo on our website. We recognize them by name in our annual report, and we put the logo on our e-newsletters. We'll do an additional e-newsletter feature where we'll just basically do a thank you to our sponsor with a picture. If they did a check presentation, we'll put that picture in it. And then similarly, we'll do a social media recognition post.
Okay, there's another question. Do you have conversation templates or starters when identifying potential sponsors? Excuse me.
Yes, conversation starters for identifying sponsors. Um, you just start by introducing yourself, stating what your role is and what you do, and say you would like to connect and make sure that our partnership is going well. And that is with people who are not yet your sponsors. So you're identifying them as partners right off the bat. You're getting them on the phone or at coffee, chatting about how, let's say it's an insurance agent who has customers who have gotten down payment assistance through us. We'll just chat about how was that experience for you? How was that experience for our shared customer? Um, what value did we bring? I would never bring up money in the first meeting. Um, and it's not because I'm trying to run some long con. These people know that I'm a fundraiser, but I am taking the time to just get to know them and understand their relationship to our organization before I even get to that point. And frankly, it can come really naturally, and sometimes you don't even have to ask. After a couple meetings, they'll say, I see you have sponsors. How can we get more involved?
And that is the last of the questions. I think one of the things that in my conversation with you and Beth in preparing for this webinar, what struck me was the opportunity to really go to people who are already sponsoring your webinars, who are sponsoring your homebuyer education sessions, and kind of building a deeper relationship and getting more out of that relationship, whether it's, tangible or intangible things, right? That was one of the things that really struck me about the work that you've done, Erin, for NeighborWorks Home Partners. And it looks like Bruce wants to ask a question.
Yeah, so this is actually excellent and very practical, but maybe you could talk a little bit about how to build your list. And I think a lot of the people on this phone, on this call, are dealing with lenders and how to have a kind of broader reach to other potential institutional partners. And if you do anything that are non-institutional, like high wealth individuals.
Sure, yeah. So starting with corporate partners as we call them here, I start with those organizations that we have the most overlap in customers. And that can be kind of hard to identify based on how your database is laid out. And this is a little bit more of a soft skill. I really just try to talk to our lending team and our counselors. And I ask, hey, who do you have a good relationship with? Whose name do you see a lot? Who's really helpful? Who do you feel that you come out of kind of you know, these deals, close loans with a really positive feeling on both ends? That's a really good way to start. Um, Another kind of maybe not the most technically advanced way of doing this, but I just get a list of um, all of the places a Minnesotan might go to get a mortgage, right? And I look at their URL and I start typing it into our database and I see if we have a lot of email activity with folks at that organization. Same goes for insurance agents. If they are recognizing our name already from our work together, it's more likely they're going to respond to me. If we have absolutely no connection, I'm probably not going to try to create one unless I meet someone organically at an event or just, through work or life. High net wealth individuals is a little bit of that's an interesting nut to crack that we're at working towards here at NeighborWorks. We do not have a very robust individual donor program, and it can kind of be hard to start from zero there. Um, a lot of people say just reach out to the family office. Look at who owns the Fortune 500 companies in your city and town and just start reaching out to the Cargills and, the people who are owning these companies. I find that is not incredibly practical. At the end of the day, you need to find a way to put yourself in rooms with these people and get to know them before you're sending an email or sending in an application without any previous relationship. So, a really important part of my job is being out in the community, going to events, and getting building these relationships from the ground up.
So another question I kind of had, and Beth, you kind of covered this a little bit in the beginning, but just speak a little bit about the difference that it has made to have to have a full-time person who's dedicated to fundraising, because most of us are like, we don't have money to hire somebody, right? So I'm sure that you were in the same position at NeighborWorks Home Partners, and what was it that made the math make sense to hire somebody? And if you could kind of talk about the increase in funds that have come in as a result of the hire.
Yes, thank you. I'm sorry, I had a little technical meltdown, so we're sharing a set of headphones right now. So the math. As I mentioned earlier, we've had a full-time CEO and a part-time 10-hour a week. Well, actually more like probably 30 hours a month type contractor to do some basic social media. Um, and I think the math just got to the point where time was the enemy. It's like we were getting some larger contracts, and that just takes more time to keep prospecting and writing and maintaining that. So as we had our CFO leave, it was really a restructuring of two, both kind of, we now have a director of operations and finance, and we have a director of advancement. So it was kind of recasting some of our C-suite to kind of better serve our needs and be able to kind of better support the kind of growth we were having. I would say that's one practice we've gotten into, is like anytime any role in the whole organization leaves, we take a pause and really look at like, what are the needs now and what would they be in the next 3 years? And that's not, no crystal ball. We're all in a lot of change right now, but by having the discipline to not just auto repost the past job description, like I've been here 10 years, my job has changed, every 6 months. So really trying to keep current with what's happening now and what's going forward. So the math, this is a professional level job. It's over $80,000 in our market. That did attract good quality candidates. That is a big lift in investment. But I mean, literally, if you are going to get 80 more thousand dollars in operating funds, you have covered them. And they are going to continue to um, kind of produce those relationships that are long term. It's not just writing one grant, which Aaron absolutely does, that you've been writing the same kind of grant for 10 years. It's all of this stewardship. We had never really gotten a sponsorship type of program that's been very successful. Literally within months of Aaron coming, we had this matching Federal Home Loan Bank just because she called them and had seen that they had interacted with us and had coffee. So now we're top of mind. And this is really where that investment is. I've been the three-person shop in past organizations, and that's a hard place. It's hard to stretch that. So maybe that looks like a contract position. Um, but you really want to be having your CEO in that case working with that contractor to do this stewardship part. I think that's the holistic piece we were really missing. Is yes, we could write grants, and we're also a CDFI, so that includes really big, complex government type grants to the Department of Treasury. But if we're not doing stewardship, we're not top of mind, we're not getting at tables. One of the things Aaron has really done well is helping position us as thinking partners. We just met with a city planning official yesterday talking about housing counseling and how this city is actually going to put dollars in a contract to support a housing counseling organization. And this is the third conversation we've had with this individual. We are top of mind. So even if there's a group of counseling groups that is serving this particular city, hopefully that expertise that we brought to that conversation is going to pay forward. We had another relationship with a city where a student intern ends up now being the head of a community planning department and reached out to us because of those relationships. So, as much as relationships take time, they absolutely matter. I think the success that we're having right now in these very turbulent times is leaning into those relationships, and that certainly includes some of our government partners, but way broadening the pool. And having that broader pool of funding is also really going to help us be more revenue sustainable over a longer period of time. Because if any one thing isn't there, we hopefully have other things that can help fill that in and be sustainable. So hopefully that gets to some of that.
Yeah, that's great. There is another question. Can you share any innovative, out-of-the-box sponsors, relationships that you have built and how it has changed the way you pursue funding opportunities?
Yeah, I'd love to. Um, I guess by innovative and out of the box, it for me it sometimes means ending up in rooms I didn't expect to be in. So I found out that State Farm has a pretty good matching gift program for its insurance agents, and I really wanted to get us involved in that. So I started in our database looking at emails we've had to and from with State Farm agents. I reached out to quite a few of them. Most of them ignored me. One of them did not. And she was like, "Hey, I kind of don't think I've ever heard of you before, but I sort of get what you do. Do you want to come to my office and meet me?" I went to her office, I met her, we chatted, we found out we had some really interesting synergies in overlaps with communities that we work with in this part of Minnesota. She invited me the next night to go to a gala on a Thursday with no preparation. I kind of didn't really feel super excited at the moment, but it was with a community that she felt could really benefit from our services. She wanted me to meet some of the people. I went. I sat next to someone from one of our from Amy Klobuchar's office. I met her, met some more insurance agents, met the people who run this organization, and then this this insurance agent who invited me came on as a sponsor of our organization because she felt like affinity towards us and what we're doing and what we're willing to do to meet members of the community. So, like on Wednesday morning, I didn't think I'd be in Oakdale, which if you know the Twin Cities, it's not very close to where I live in Minneapolis, until 9 o'clock at night on a Thursday. Had a great time. And it created some awesome connections for our organization. So that's even though that's kind of maybe a traditional type of sponsor for us, it was a little bit out of the box in how it came to be. So I thought that was pretty cool.
So I want to ask, did you get any other leads out of that event that you went to?
Yes, we found out that the community who was hosting the gala are actually very like geographically located in an area where we do manufactured housing lending, and many of these folks are interested in manufactured housing. So I'm actually going to meet with their housing team to talk about our manufactured home loan product.
That's great.
Yeah.
So you end up with a totally different trajectory from where
Hmm.
you started just by following through on that. Oh, it looks like another
Yeah.
question popped in. Would you be able to share this? Oh, the recording will go out by email to our listserv, so you'll have the recording of this webinar. You'll also have all these links that have been popped into the chat and a link to the presentation. And you can always just go to our YouTube channel and watch the presentation. Okay. So, thank you so much to both of you for all of this really great information, and I'm going to hand it over to Bruce to wrap it up.
Excellent, and thank you very much. And we continue to do these the funding the mission through sponsorship, revenue remix kinds of proposals. So we're always looking for great opportunities. So if your organization has got some interesting, independent, not related to the federal government funding stream, please reach out to Ellie to see what you can arrange. We're also continue not to have, we need to find some, an organization that's successfully doing nonprofit real estate work. We we had a few of those years ago that seemed to be quite promising, and it'd be great to see who's doing it today. But moving
So,
on, oh yeah, go ahead.
yeah, before we move on, sorry, we did get one really good question.
Oh, okay.
So would you recommend that agencies with similar service offerings partner to hire fundraising professionals? So share somebody.
That's a really good question. I've seen that done. I've seen fundraising kind of coalitions occur where one person or a group of people is fundraising for many similar organizations. I think it can work. You need to make sure that you are the folks that are coming together to hire someone need to be very, very, very clear in your understanding of the expectations, how funds will be used, how they will be divided. If you've got, for example, a donor who wants to come in with a restricted gift that doesn't meet the service that's provided by everyone, how are you going to deal with that? Because it's really important to fulfill your obligation to the donor. So you may need to turn down that gift if you can't decide a way to equitably kind of share that funding that you've raised. I think it can be a really good way to raise capital for a product that maybe several organizations will be administering at the same time. And um, and I would just, yeah, I would just, suggest that's kind of my main point here is just be really, really clear when you're coming together and make sure that the organizations fundraising together have a kind of an incredible relationship going into it.
Good points. Okay, and there are no other questions now, so forge ahead, Bruce.
Okay, so uh,